Believe it. Markets fall, but you don't have to. I'm Naruto, not just ninja, but your investing sensei today. I'll show you a step-by-step plan to protect and grow your money in 2026. Simple moves, practical tactics, and ninja metaphors. Let's armor your portfolio for whatever the economy throws. Before we jump into today's video, I need to make something absolutely clear. This video is for educational purposes only. I'm not your financial advisor, and I'm definitely not a Genin-level accountant from the Hidden Leaf Village. Everything discussed here is meant to simplify financial concepts, not replace real financial advice. Always do your own research, consult professionals when needed, and make decisions based on your personal risk tolerance and long-term goals. 2026 is a mix. Pockets of strength, but risks remain. Slowing growth signals and mixed indicators. That means surprises for investors. You don't need to predict the storm. You need shelter and plans to act when winds shift. Think like a scout. Read the signs, not panic. Ninjas always carry spare tools. You must carry spare cash. Aim for 3 to 12 months of expenses depending on job security. Cash stops you from selling at the bottom and gives ammo to buy bargains after drops. Keep it liquid. High-yield savings, short T-bills, or money market funds are fine. Your core should be simple and cheap. A broad S&P 500 or total market ETF. This is your Uzumaki backbone. Steady, resilient, and low fee. Warren Buffett's 90-10 idea shows how a simple, low-cost core plus some bonds beats complexity for most people over time. Defensive sectors act like a shield in recessions. Consumer staples, healthcare, utilities. People need them even in downturns. Tilt part of your equity towards these when risk rises. This doesn't mean all in, just a defensive sleeve to soften the hits. Dividend growers and aristocrats often fall less and pay steady income during stress. They're not invincible, but quality companies with rising payouts cushion returns and give cash flow to reinvest when prices fall. Focus on balance sheets and free cash flow. Bonds provide income and diversification in 2026. Expect income-driven returns in a range-bound rate environment. Favor short to intermediate duration and consider laddering to limit sensitivity to rate moves. Use bond funds or ETFs for convenience. ETFs are like multi-clone jutsu. One trade, many positions. Use liquid, low-cost ETFs for core exposure, defensive sectors, and bond slices. Check expense ratio, assets under management, and spread before summoning. Small allocations to REITs, commodities, or alternative credit can diversify further. Treat these like specialty jutsu. Useful, but risky if you don't understand them. Keep allocations modest and explainable to yourself. Rebalance periodically, yearly or when allocations swing 5 to 10%. Rebalancing forces discipline. Sell some winners and buy laggards. It's boring, but it consistently improves outcomes by enforcing buy low, sell high. Strategic allocation is your long-term map. Tactical tilts are short-term moves with rules. Avoid emotion-driven trading during drops. If you tilt tactically, predefine size and triggers so you don't over-rotate and lose your plan. Treat leverage like a tailed beast, dangerous in turmoil. Size positions so no single holding wrecks your plan. Use stop losses sparingly and only if they align with your risk tolerance and tax plan. Place tax-efficient assets in taxable accounts and growth assets in tax-advantaged accounts. Harvest tax losses when handy to offset gains. That gives dry powder and tax benefits to redeploy later. Small tax planning adds up over years. Monitor key signals: yield curve behavior, unemployment trends, and consumer spending. These don't predict exact timing, but help adjust posture. Stick to rules. Don't change strategy on every headline. Change only when data crosses your preset thresholds. 3 things to do now. 1. Confirm emergency cash. 2. Pick 2 to 3 low-cost ETFs for core plus defensive sleeve. 3. Set a rebalancing rule. Execute calmly. Markets test your nerves. Your advantage is discipline. If you liked this, subscribe and tell me which part of your portfolio Naruto should review next.